Hi there, it's Bill with Smart Trades. It's Tuesday, July 5th, around 11 a.m. Pacific time. I'd like to start off today with a quick review of the last month or so's reports and charts. And this first chart is the S&P Cash Weekly. This was first posted on May 30th. And you'll notice at that time I was looking at the possibility that we had a fourth wave triangle. There's other ways to count the long-term picture, and I'll get into that later. But the essential pattern that I was suggesting was that we would rally up to around 1350 and then drop down into the 1270 area at that time, perhaps a little lower. Here's an update. This one's actually from the 16th of June. And again, here's that triangle with a little bit more detail. And, this is what I had projected at that time. Here is the E-mini. This is also from the 30th, and this is my actual favored longer term count. And I had noted the possibility that we could actually go all the way back up to the 2007 highs in a flat. But first and foremost, again, the triangle pattern that I thought was working out, or at least a fourth wave pattern of some degree that involves sideways to lower pricing from that date. And here is my last report from the 28th. This is the lead slide from that report. And at that time I said I favored that we were in a D wave that would rally up to the 1340, 1350 area. I did acknowledge the possibility that we had a fifth wave to come and that this whole pattern would evolve into a flat. And in fact, I still think that the flat scenario is possible. I'll get into that in a moment, but not for the S&P in this context. Again, the favored projection was a rally up to 1340, 1350. Now here's how it's turned out so far. Actually, this chart is from Friday, and this is what I sent out to my clients at that time, that D could still be peaking here. I do have a bit of a concern that the rally is somewhat too impulsive, particularly in the NASDAQ, to be a D wave, but that's not atypical of a C wave, so it's still possible. And moreover, I think the most important thing to look at here is that the context of the longer term count. And we have a series of ABCs, an ABC down of A, ABC up in B, and what I think best counts as ABC down in C. And we still obviously may be working on ABC of D. Here's the longer term picture again and the updated picture on the S&P E-mini continuous futures. And again, the possibility that this is an unfolding fourth wave still in progress. Here's the NASDAQ. As I noted, the NASDAQ is stronger than the S&P, and it has been stronger. And in fact, that's one of the reasons, one of the clues that led me to think that we were in a D wave that was going to rally back when we were at about 1290 or so on the S&P. The other thing that's important to note here is that the NASDAQ actually took out the March lows. So the best way to count the rally, or I should say the correction in the NASDAQ, is ABC down A, ABC up B, and a possible completed flat correction at the June lows here. And from there, obviously, you can count this rally as impulsive. As a practical matter, it's not that important at this point, because whether or not we have a wave 2 decline or an E wave decline, the context would be similar. However, obviously, we could go higher sooner if wave 4 has already ended. And here's my tentative count on the NASDAQ showing a series of 1-2s, and we're obviously in some kind of third wave here to the upside. And probably there's, at least on the short-term basis, a little more to come, particularly again for the NASDAQ. Here's a bit more of a close-up on the S&P Cash. Please note that the decline to the June low retraced 89% of B, and 89% of C will come in around 1358. So the idea that we have to peak immediately here if this is a D wave or we can't take out 1350, I think is inappropriate. Indeed, we'd have an exactly symmetrical rally up around 1358. That said, there's also resistance around 1345. There's no reason that this has to be perfectly symmetrical in respect to the previous waves of the triangle. At any rate, let's watch 1345, 1346 or so. And if it does get through there, I would look for a possible completion, particularly if it's an ABC up around 1358 for D of the triangle. 89%, by the way, is the square root of 0.786. 0.786 is the square root of the golden ratio, 0.618. Those numbers are rounded off to the nearest full percent. Now here's a count that some folks had been using, calling this a fifth wave peak, and I had noted some time ago, I think on several occasions, I didn't agree with that, largely because the rally best counts as an ABC to the 1370 high in the S&P. Now there's other red flags in here too on this count. Actually, some folks have counted it that we had a 1, 2, 3, 4, 5 to that fifth wave. Well, Elliott Wave 101 tells us that Wave 4 cannot overlap Wave 1, and in this count, Wave 4 indeed overlapped the top of Wave 1, the bottom of Wave 4 overlapped the top of Wave 1. That negates this count, and basically, when you see somebody counting like this and saying that this is a possible impulse wave, you have to ask yourself, are they really imposing their opinion over the rather obvious structure of the pattern and ignoring, the most basic Elliott wave tenets. Another red flag with this count was that folks were counting this as a leading diagonal. Leading diagonals are exceedingly rare. I've been counting Elliott wave charts since the mid to late 80s, and leading diagonals they occur, but they are extremely rare. If you're banking on a pattern being a leading diagonal, you're probably going to be wrong most of the time. So if somebody says something's a leading diagonal, wait and see. It's certainly a possibility. It is a valid Elliott wave pattern, but again, they're extremely rare. Here's my longer term count on the S&P. Again, S&P cash, and this is a monthly chart, and I've actually posted this chart in the past, but I just wanted to update. It's been quite some time since I've done so. And again, my count from the peak in 2000 is that we have an ABC down, which I'm counting as a very large A wave, to the 2009 low. From there, we have what I believe is an ABC still in progress. I think it should hit at least 1385 or 1400 plus, and it's possible, as I said before, that we could actually go all the way up and test the 2007 peak. So anyway, that's getting a little ahead of ourselves. We'll see how it develops, but it's certainly not impossible that the rally could take us that far. At any rate, important to note here that once this structure is finished, and again I believe it is A of a very large B wave, the B wave decline could take us, it's hard to say exactly, and we'll have to watch it develop, but the potential is down below 800. So I think in this context we do have to be somewhat cautious here, given that the next really big move is probably to the downside. That said, let's take the patterns as they are, and on the short term, I believe that it's clearly the most probable scenario that we've got a fifth wave to come, perhaps in the context of a C wave. So we'll see how it goes. Just a quick update on the Euro FX. I had noted a possible peak here. I'm much less confident that is indeed, that we have a top in place, and indeed the Euro FX is starting to count a little bit as a triangle itself. That would fall into place with the stock market as well. So we'll see how it turns out. But unless we can get through this area here above 146 on the euro, that triangle is a possibility. And anyway, you cut it, the decline so far from the May peak does not really count well as an impulse to the downside. So there's certainly the possibility we're going to see new highs. Excuse me. And just a quick update on crude oil. Crude oil, as I noted, had a target of 90 if this was an ABC decline. And indeed, I think the actual low was 89.60. We had a little tiny double bottom here. And I think that this decline best counts as an ABC. And I said that if we got through 96, that would lead me to believe that indeed we do have an ABC decline in place. And obviously, as the time of this chart, we have rallied through the 96 level. Further confirmation would occur if we get through the top of our B wave here, about 105, 106. That said, the context of this is that this whole ABC down could be part of a larger ABC, so I'm not necessarily calling for some extraordinary rally. I think the longer term context of crude is that the rally up is also corrective, but that said, the potential exists certainly for somewhat higher prices in crude, particularly if that 89.60 area continues to hold. Anyway, that's about it for now. Hope you had a great 4th of July weekend, and good luck in the week ahead. Thank you so much for watching, and if you want more frequent updates, please visit me at smarttrades.com. I do daily updates via Twitter and multiple updates every week through my newsletter. Again, that's smarttrades.com. And if you like the video, click the like button. It'd be nice to get some love. Thanks a lot. Have a great day. Bye-bye.